Feroz Aziz joins us on the show right now, Deputy CEO, Anand Rathi Wealth Limited. We also have with us Sanjay Shah, CMD at Prudent Corporate Advisory Services, to talk about exactly how is it that one should be analyzing this data right now. Feroz, great to have you in the studios. Let me start off with you first. You know, it's kind of an aberration, or I don't know, is it an aberration? What could have triggered the data for the month of July?
See, if you look at data of the inflow, it is a record high and the net flow is significantly low. Why do I call it a record high? If you see 1 month jump in SIP numbers from 21,260 to 23,332. This is a 2,000 crore jump in 1 month of an SIP inflow. Okay, and Sanjay Bhai is there. He's been collecting SIPs and the Abhiyan chala rahe hote arzon se. It cannot be just retail contributing 22,000 crore increase in SIP. The HNI is also using SIP as a route. That's one clear inference which is coming. Like NJ and Prudent are the largest SIP garnerers for the country. And I would not be surprised if NJ's number after 30 years is 1,500, 1,800 crores of SIP. And 1 month the SIP has gone up by 2,000 crores. So one inference is HNI is using SIP as the route of entry because of the levels. That's point one. Point two, I think AMCs are looking at the numbers little incorrectly, which makes them, वो कहते हैं ना गालिब ये दिल को ख्याल बहलाने के लिए ख्याल अच्छा है, because there is no way to segregate a folio as SIP folio and lump sum folio.
But you register SIP, no?
You register.
You don't register.
Okay, let me give you a couple of examples. My chauffeur, my driver does an SIP of 4,000. He does 2,000. I add 2,000. He has accumulated in the last 6 years in HDFC FlexiCap 4.5 lakhs. Now, will he not be worried that his lifetime, 30-40% of his lifetime savings is in one scheme? He is redeeming that and continuing the SIP of 4,000 and redeeming this from an SIP folio and doing lump sum folios into 6 schemes. Will you call this a redemption from SIP?
Technically not.
Clearly not.
But it classifies as a redemption. भाई किसी की अगर lifetime saving एक scheme में चली जाएगी accumulate करते हुए, then it's logical that he will be worried of one scheme. Now he is also looking at mutual fund सही है, but एक ही नहीं सही हो सकता. 600 में से he will redeem and put it somewhere else. That is called as lump sum, but it's nothing but his SIP accumulation.
Just money getting recycled.
Again, on the contrary, I did exactly the opposite. I had an SIP running. I got some lump sum money. I bought a purchase in the SIP folio. Now you're counting that as an SIP inflow because you marked that as an SIP folio, but that's not an SIP inflow from a net basis. So why segregate a folio as SIP folio and non-SIP folio when there is no marking? I have the right to buy an SIP in the same folio. I have the right to buy a lump sum in the same folio.
True.
What you should look at is the net sale of equity mutual funds has been 37,082, which is a reasonable number. The reality is mutual fund is losing HNI money to complex products. That's the reality. You may want to close your eyes when the cat drinks the milk. HNIs have moved money to PMSs in spite of risk being higher, concentration being higher, taxation being higher, commissions being higher. I think the last one makes my point.
Okay. So, Sanjay, I'll encourage you to jump in on this one. And I'll tell you what we're trying to perhaps address here and understand here is that there's a number of 20,000 crore which is sealed in everyone's mind that doesn't matter what the economic reality is, does not matter what the global picture is. Every year, every month, fresh inflows of 15 to 20,000 crore are given for Indian markets, and that is a big psychological booster for equity investors. How realistic is that number, and what is the right way of looking at that number?
Nikunj, I think the Feroz has rightly explained. As far as the data of 23,000 is concerned, which is about 9.3 crore of live SIP as a last month, I think that's a real number. I don't see any issue in that number. If I'll corroborate the same thing with my number, today in the last month, we collected 820 crore from 27 lakh SIPs. When I'm talking about 27 lakh SIPs, which is live at my end, I will exclude all those SIPs where the one installment has not got hit in last 3 months. Other way around, if there is 3 continuous months of failure, that SIP would be removed, and there's a definition of AMC also. Now the problem, what Firoz explained, on one side, we are collected at average about 2,000 rupees from 9.3 crore SIPs, about 23,000 crore. On against, let's say some, like for example, Sanjay Shah का एक SIP चल रहा था 5,000 रुपए का for last 10 years. Now the money got accumulated 6 lakhs rupees. We are redeeming that 6 lakhs rupees from that, and we are today seeing that the gross is 23,000, but the net is 8-9,000. So I think that cannot be adjusted, because what you want to report has to be the how many new SIP came and how many new SIP got redeemed or matured. I'll just give you an example, corroboratory example of my case. Last month, for example, we did 1 lakh new SIP. Against that, 30-40,000 SIP were either matured or renewed or stopped. So net addition is 70,000. So 70% of the new money is now getting into a rollover. So that is the real number which you need to project and say. So I just wanted to communicate the retail participation is real. Money is coming in a lot, I think, very, very comfortably. The experience of the real people are very, very mature. And most positive sign is, sir, that there are a lot of people who are investing only through SIP. I'll just give you my example. There is 30% of investors. I have about 18 lakh customers. 5 lakh investors are only investing through SIP. They do not invest lump sum. ये पूरा रिटेल है जहां पर 5,000 की SIP चालू करी है. Whenever he has the salary increase, he'll add another 2,000 rupees SIP. So I think it's a very, very positive thing, and we always say this is a 401k moment which happened in US in 80s. This similar thing is happening in India through retail participation.
So Firoz, that same point, which is that there is this huge factor in the market, which is the bedrock of the market, that every month 20 to 22,000 crore of fresh flows will come by a retail investor. Since we are discussing data, and now again a lot of opinions are floating around, ye gross hai, this is net, what is the realistic inflow in the equity market every month according to you?
So if you break this into 3 platforms, SIP, non-SIP is mutual fund platform, right? Then AIFs, long only AIFs, and PMSs. If you look at mutual fund, our estimate on a net basis, lump sum mein aaya, if it came in lump sum, SIP, net is what matters, right? That's what I think we should look at as an industry. That has averaged at about 15-17,000 crores for the last 1 year. And I wouldn't be surprised if that's going to be 20,000 crores net, both lump sum and SIP for the next year.
NFO, lump sum, SIP put together, 15 to 80,000 crore of fresh equity inflows are coming every month.
Through only the mutual fund.
Through the mutual fund, okay. Now let's move to other categories.
Correct. AIFs can be marked very easily because they use a pool account. PMS is very difficult because I open a PMS and the same PMS Nikunj Saab opens. We will still be trading in our own demat accounts. It's not going to be very easy to decipher. So if I'm looking at HNI money being plowed through these 2 platforms, I wouldn't be surprised that equal quantums are coming through that, but not as numerically sharply measured.
Okay. And where is that number if you just have to do a rough maths for at least AIF, since we can match it? And what is your understanding on PMS? Because I'm sure you must have done some indirect work. There would be some market estimates which are floating around. So net, so mutual fund is about 15 to 18,000 crore. If you add back AIF and other PMS, where would that number be according to you?
So there's one way to work out what is the net flow in each PMS. You look at the total mark to market, but the AUM increase, which is not explained by mark to market, is the net flow.
Yes.
We did an estimate. We've done an estimate only for May. Sorry, November. It's not been updated. That was about 9,000 crores.
Okay.
Okay, because PMSs are done independently.
Yes.
So if a PMS grew by 10% in that month, for example, or 3% in that month, but the AUM grew by 6%, the other 3% is the net flow. By that backward calculation, we got 8,000 crores.
So if I add everything together, Aisha, we are looking at what, 15 plus maybe 8-9,000 from PMS and then AIF put together. And we are not talking about direct equity purchases here at all.
Yeah.
I mean, that's completely separate. That's that's the trading and the amount of demat accounts which are opening. We are looking at about 30 to 35,000 crore of net inflow coming by the Indian retail DII or the HNI investor every month.
I wouldn't be surprised if that number is as accurate as it could get because you've broken it down.
Okay. Sanjay bhai, 35 se 40,000 crore rupees. It is not 20,000 crore. That is SIP. You need to add other numbers also for 30 to 35,000 crore. Yes,
you
please.
missed 2 very big contributors, sir. One is the LIC,
Okay.
another is the private insurers, and third is the EPFO. So
No, no,
this
I'm
money
not.
will also
I'm talking about retail. I'm talking about retail and
should
HNI.
be, I think, yeah. So retail, if you look at probably the through demat route, people are participating similar or about 70-80% of mutual fund money comes in. So if you look at mutual fund, we normally says that जितना SIP का पैसा है वो I think over a period of time उतना पैसा रह जाता है retail का. So you are right. If you are talking about 20,000 crore today, you can assume in the current year 2.5 lakh crores should come by retail. Roughly about 1.5 lakh crores should come by way of your what you call the equity route. So about 4 lakh crore, and then PMSAI would be about 40-50,000 crore on a net, excluding the mark to market. So I think 4.5 lakh crore रुपया retail का आपका दिख रहा है. So it's about 35-40,000 rupees, 35-40,000 crore per month.
Let me start adding LIC. Let me start adding, your flows which are coming from NPS. Let me start adding the number which is coming from EPFO. And Feroz Bhai has already started calculating on his phone. Okay, sir, how is that number adding up?
See, I'm not adding up. I'm just highlighting the fact that you can get these 7-8 breakups. Of course, maybe I'll come back or at least send you the data for you to analyze it. There's breakup of bank, insurance companies, mutual funds, AIFs, PMSs, FPIs, and retail, and others on the websites. And yesterday, for example, if you look at retail, now that we're discussing, redeemed 624 crores day before yesterday. That's the number. So I'll probably collate and then give you so that you can actually decipher as precisely.
But
as
broadly, you add everything together, what Sanjay is saying, what your maths is adding up, we are looking at about 60 to 75,000 crore broadly. जैसे हम कहते हैं ना हिंदी में मोटा मोटी बॉल पार्क number is 60 to 75,000 crore of net inflow, whether it is institutional, whether it is insurance, whether it is EPFO, whether it is PMS, whether it is SIP, whether it is HNI.
The money
that
is coming
money
in.
is coming in.
Yeah.
And that is a sizable inflow which we don't talk about it. Aisha, we only talk about 20,000 crores. But the real picture is very different.
Yeah. And also, since you do look at the data so closely with a magnifying glass, Feroz, where is the money coming in? What kind of schemes are finding, fancy in the market right now? Because there's so much about, small caps mein bubble hai, you need to book out of that. Is money still gushing into those schemes?
Isha, agar aap dekhen, there are two questions in that intertwined. Where is it coming from? Where is it coming to?
Yeah.
Right? From, if you draw up a context, if you look at the 830 lakh crores of Indian household savings, we are speaking about 6.7% in equity. Where is it coming from? It's coming from the awareness that if they have to beat inflation, you can't have 6.7% in Indian equities. Yeah. Right? It was 4.3 a year back. Now it is 6.7, including mark to market. Now, if Nikunj sir's number, 60 to 75,000 is ballpark mota moti correct, you can project what will be the Indian household savings through DIIs and through direct and all routes after a year, assuming a certain mark to market. We still have to get as an Indian household to at least 20% of equity in the next 10 years. 6.7 to be precise, from 4.3 in spite of that kind of mark to market. Because 4.3 पे अगर 40% की return बनी, वैसे ही आप 6 पे आ गए.
No, you look at the data, Feroz. You've seen the market cap of Indian market going up by $1 trillion in about 5 to 6 months. Right? That's a broad wealth creation which has happened at an aggregate level. 25% is now owned by DIIs. And I'm not adding back the PMS, I'm not adding back the individual investors. It's only domestic institutional investors who own 20% plus of the market now.
Correct.
And they are the ones which are represented by HNI investors, and they're represented by corporate houses, and they're represented by retail investors. We've seen a $250 to $300 billion of equity wealth effect which has got created in less than 6 months. That is like the sizable scale in which our equity is now really creating that wealth effect. Like we say,
and
this
still
is
participation is at a very nascent stage, I would say.
we are calling it the common bull
Penetration.
market, common man's bull market. We are not calling it like that. I mean, this is the common man bull market which India for the first time in its lifetime is experiencing.
Yes, Nikunj, right. To that comment of yours, it's a common man's bull market. Why would I completely agree with it? Is because the HNI is doing opposite of what he needs to do or she needs to do.
Which is?
Last year, when the market was lower than today for sure, HNI was selling. So the common man from an Indian perspective is the Indian retail, right? We are not represented by 99% of the country being HNI. It's only 0.7% of the country which is HNI. So common man's bull market is even more amplified because common man is buying at the right time this time around.
So you were telling us about what's really seeing the inflows, whether it's large caps, flexi caps, small caps specifically?
So I think small caps, because that's where, like you alluded to, a bubble. Bubble is a harsh word,
Yeah,
like you
but-
said, no?
yeah.
But people are using that.
People are cautious. People are wondering, when is this party going to get over? Or is it going to get over at all or not?
See, all parties get over. Some parties get over at sunrise. Like if you go to Goa today, people party till sunrise. There's a sunrise party. So parties get over for sure. When is the question? How do you see whether the party is getting over? Is respecting liquidity. Indian analysts have not respected liquidity so much. 1 year back, on 11th of September last year, mid cap was called mad cap. Right? And we are speaking almost in a year. So liquidity has to be given its due credit in a low free float market. That's my statement. India is a very low free float market. The 500th NSE company has 3,000 crores of free float. Right? So liquidity also has an influence in price re-rating, not just growth numbers. But small caps have grown. If you look at Nifty growth, I'm so surprised that people are not enough talking about a 28% growth in Nifty earnings last financial year. 28%, 1,048 is the Nifty earning from 819. Has it got its due highlight? I don't think so. Small caps have also risen last year by 38% in earnings terms, but liquidity has given that re-rating at least a 10 PE higher from a median of PE. I think that will reverse, party will be over, but the first person to call that party reversal will be the person who will respect liquidity and acknowledge that the trend has changed the day it changes.
And right now you're not seeing any of those signs. You're still seeing liquidity gushing into those schemes.
Last 27 days, as per our computation, small caps have got a positive inflow with day before yesterday, 183 crores in active and 23 crores in passive.
Okay. So Sanjay, we'll get the closing comments from you. It's Friday, last trading working day of the week. So that party has already started. Now Firoz Bhai thinks that the party in Goa gets over at sunrise. But for Cinderella, the party got over at 12 o'clock, right? So what should one do? How long do you think this party will continue?
I think it's a huge liquidity which is coming, and probably I think party always has to link to the corporate profitability growth, economic growth. And if you're, because it's what you're trying to talk about, even the valuation is a little bit, or rather overly stretched, you need to look at what future looks like and how the money comes in. So probably I can tell you, as far as retail is concerned, I think as long as you see that there is no significant drawdown, I think party will continue. And we wish market goes into a range bound movement. On the flows, which you asked about the question, I can tell you that of lately we have been seeing a lot of money going into a dynamic and the asset allocation kind of a category from a retail. A lot of thematic funds are also collecting money. However, in case of small and mid cap, largest contribution comes through automatic route from SIP, and that is something which is continuously bringing the money. So, but overall, I believe as long as sentiment and the the corporate profitability growth continues to be remaining robust, you don't see a huge drawdown, right? And if you do not see a huge drawdown, I think retail sentiment will remain very, very robust and constructive.
Number which Firoz Bhai spoke about, 60 to 75,000 crore. What is your number if we have to put everything together? Insurance, HNI, AIF, PMS, everything, LIC, everything put together.
No, I don't have to. I assume about EPFO put in about 1.5 lakh crore every year. I think LIC has 1 lakh crore to be invested. Similar amount will be from the private insurance also. So roughly about 2.5 to 3 lakh crore, which comes from non-retail, non-mutual fund. So I think the sum of total should come to the same only, because 15-20 crore रुपया SIP से आएगा, करीबन 8-10 हजार crore रुपया आपका mutual direct equity से आएगा. So 30,000 crore ये हुआ. And if you look at 3 lakh crore, which is about 25,000 crore, so roughly about 55,000 crore should be the, so about 6.5 lakh to 6.5 lakh crore should be the yearly inflow, which is on the automated mode. Another positive point is, the mutual fund sits on 2 lakh crore of liquidity today. That is the biggest counter-cyclical force. And in that, if you look at the balance advantage category, which they are supposed to invest when market falls, is also having the liquidity of 1 lakh crore. So even mutual fund also has a very large liquidity available.
All right, so nice to hear that. We thought we'll talk about the net and the gross number of SIPs, and what do we have? Well, we have a real big picture analysis of that. It is not just SIP, it is more than SIP, which is keeping the Indian equity market going. And that explains that when markets are falling, why flows are coming back. From where flows are coming back, now we're able to connect the dots. It is insurance, it is EPFO, it is HNI, it is AIF, and all that put together, the number could be anywhere between 60 to 75,000 crore net every month. Wow. That's the way how things are moving, and that is what you need to focus on. Gentlemen, so nice to have you both on ET Now. Thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.